What's up guys, welcome back to Finance to Fly. My name is Luke and I'm here to help you elevate your travel while minimizing your spending. Today we're going to be covering what your credit score is, how to find it, and why is it important. Let's jump in. So what is your credit score? Well, it's a collection of the info and data points that is gathered from having open lines of credit you have and attempts to open and length of history and stuff like that. We're going to go in depth more quickly. You're scored on a scale of up to a score of 850, and it really determines how creditworthy you are to banks and other lenders. So it breaks down into 5 categories and it all affects the scores in their own way. The first and most important category is the payment history. This makes up 35% of your score and is calculated based on whether you've paid your bill on time or late. One late payment can negatively affect your credit score for years to come, so don't miss a payment. The second category is amount of debt you have on the card / the card utilization ratio. This makes about 30% of your score, and this tracks your balances you have on cards with your credit limits, your loans, and stuff like that. This does not keep track with your history of this, and it updates with whatever utilization your card reports to it at the end of the statement period or whenever you pay the card off. A good goal to keep in mind is keep your utilization under 30% of your total credit, but if you have to go over this from time to time, it won't hurt you as much in the long run. Just make sure to pay your bills on time and in full. And then another thing to note, when you're going to get a new inquiry, maybe you have an inquiry, you think about doing an inquiry in about a month, just make sure your utilization ratio is lower because the credit lenders will like that better. The third category is length of credit history. This makes up about 15% of your credit score and is made up of how old your oldest account is and the average age of all your accounts. The fourth category is amount of new credit you've opened in the last 12 months, and this makes up 10% of your score. This is made up of the age of your most recent account and numbers of inquiries. A lower number will help your odds at getting approved, while a higher number will lower your chances of getting approved for a new line of credit. Lastly, the fifth category is your credit mix, and it makes up the last 10% of your credit score. This part of the score is determined by what types of accounts you have open, such as credit card accounts, loans, mortgages, car loans, etc. The more variety you have, the better it is for your score. So now where can you find it? Well, credit card companies like Chase and Capital One provide one for you, but it's not an official one. Well, it is, but it's not like the all-inclusive one. It's more of a simpler one to speak and may not reflect your actual credit score. Amex just recently, over the last year, started providing an actual one from Experian, which is where I got all of the information for the 5 categories from. So that's from Experian. But the 3 main places you can find your credit score are Experian, TransUnion, and Equifax. Your credit score is a bit differently, but all the scores should be within a 5 to 10 point range of each other. So moving on to why it's important to keep track of your credit score. Well, first off, it's important to keep track of your credit score because if you want to get a new credit card, you're going to need a good credit score. Not only that, some banks like Chase have rules in place where if you're above 5 cards opened in the last 24 months, they will automatically deny you for a card. Not even look at it. You should also keep track of your credit score, especially when you open a few credit cards within a year, because banks look at that for car loans and mortgages. So you may not want to open up like 5 or 6 credit cards in a year and then go try to apply for a car loan and then a mortgage maybe, and you'll probably get denied from those because you opened up so many cards at the front end of the year. This just shows banks that you're a little bit more risky and may lower your chances of getting approval, which could suck. And obviously you might not be more risky, but it's still just their algorithm and how they approve things. They have to look at it as a number standpoint. Lastly, a good reason why and something you should do with your credit score is keeping it frozen. Right now I pay something like $5 a month with Experian to have my credit report frozen. Why, you may ask? Well, say someone gets a hold of your personal info and wants to come up with a car loan, a credit card, or a mortgage in your name. If your credit score is frozen at that point, when they go to apply, they automatically will be denied and you'll be alerted with an email really quickly. This is a huge way to prevent you going down a long road of having your identity stolen. Obviously, it's not an end-all be-all, but you'll want to make sure you're taking the necessary steps next to make sure nothing further happens. But it's a great warning sign. It's kind of like a canary in the coal mine. It's better to be preventative instead of reactionary to these type of situations because it just saves you a lot of headache down the road. Freezing your credit report won't necessarily stop someone with malicious intent, but it can be a good buffer to maybe get them to stop for a time being, or even give you enough time to freeze the rest of your accounts or do the necessary steps to prevent yourself from experiencing the whole meltdown that could happen. It's just a nice preventative measure that you can take to just be active and protecting your personal data. And I guess that's another reason why you're going to want to keep track of your credit report. Even if you don't freeze your accounts, you would still be able to see the unauthorized inquiry on your account and take the necessary steps to prevent further fraud. So all in all, what do you think? Do you think they rate credit scores fairly? Do you want any changes to happen in the credit scores? Just hypothetical, right? Let me know down in the comments below. And if you could hit that like and subscribe button, it would be greatly appreciated. Until next time, have a great day.